All right, we're on a roll. Thank you all very much for your patience. Starting the week, happiness is not an absence of problems, but the ability to deal with them and the issues. And I don't like the word problem. I like obstacles. I like, challenges, I guess is one way of masking the word of a problem. I mean, what's a problem? A bad trade? It's not a problem. It's a bad trade. And how do we deal with those bad trades? Understanding our methodology, understanding our ability to get over and maybe our ability to look for other opportunities if the market doesn't make sense to us. So that I think is the epitome of what we try to strive for to be a better trader, is being able to have the ability to deal with problems. And what is a problem? Problem is market's not moving as I understand it. Problem is market's too volatile for me. Problem is I have a loss streak. Problem could mount to many things as it relates to trading. I think the key is being able to know that you have a sound methodology, the ability to know that you're capable of coming back, and that if you are experiencing stress while you trade, then real simple, how do you deal with that? Stop trading for a little while and and find out what the rationale or the thought process is behind causing that stress or anxiety. Anyway, that's our daily. I should change that because that's really a weekly positive thought. That really should be our focus for the week. Anyway, so my market thoughts over the weekend and observations real quick. I'm going to move this off to the side so that we can, and I'll return to this page momentarily. I'm just going to go over and take a real quick here look at our market conditions, our breadth, AD lines, and volume analysis as it relates to this page. First off, I think everyone probably, if you looked at a weekly chart, you would have noted that, in the last 1, 2, 3, 4, 5 weeks, 3 of them have been dojis. And then in the last 8 weeks, one's been a shooting star. So there has been a lot of, there's been more bearish formations up here, or at least a formation that creates indecision in the marketplace. But the volume, even though we closed up a half a tick, we've certainly seen and really haven't gone very far since the week ending May 18th. And I mean, that's been almost, as you can clearly see, we're going on our 5th week here. We really haven't gone anywhere to the downside. And if anything, you've got to recognize that we are still forming higher lows over the last 3 weeks. Is this trend going to continue? Something will change, but the volume was very strong. And if this is a seasonally weak period of time that we're in right now, and this is the best that we can get, I have to really examine this market carefully and say, what's driving the market? What's causing it not to go down? What's causing it not to go up? And what I see is simply some sector rotation, as we've seen a lot of stocks get cut in half, 50%, 60%, and then we look at some of the other sectors like the transportation, which soared to a new high, as well as looking at some of these railroad stocks. So if consumers aren't buying, number one, what's being shipped? Because it's not all just energy, and if they're shipping all this energy on the rails from the Dakotas and the shale Bakken area, then, or LNGs, liquid natural gases, then someone's got to explain to me real quickly why we don't have cheaper fossil fuels, and it can't be on the expectations of what's happening with Ukraine. So, and all that said, I firmly believe that it is a sector rotation correction that's coming out. And when we take a look at the weekly analysis, even the NASDAQ 100, which did close positive last week, volume wasn't there, but we start to enter, we have a little seasonal upturn coming in the NASDAQ, and I think we may have seen a little bit of that sector rotation from some of the blue chips going into NASDAQ last week, and some of the stocks we put in our list on Friday. So, EMC was up, and, some of those other names. So when we take a look at the Russell and we say, well, the Russell still has a seasonal downturn. It has a small little upturn this week, a dead cat bounce possibly. this is a market that's sitting right at its quarterly pivot. These are weekly bars now, and we've hit down to this level so many times, and the real I think essence of the support level can be seen right here, which started by that breakout candle, that last conditional change. It created the support for that pullback. It created the support for that pullback, this pullback, that pullback, and really it's a close, a daily close, or even a weekly close below that level, and then I think it's Katie bar the door, and it's going to be a different story. But the fact is that the volume on this little decline from way back here, prices are lower, volume's not. And what I mean by that is simply if we take a look at the lowest price on a weekly basis was on February 7th. We've made new lower closing lows on the weekly basis, but on kind of weak volume. And even the advanced decline hasn't gotten to that level. So it looks as if perhaps the selling pressure for the very least is drying up. And then last week we formed a doji on the Russell at quarterly pivot support. So it causes us to be on alert for, is this a pause before a major decline, or is this just maybe a pause of the descent in price and we have one more summer splurge to the upside? Looking at the NYSE, New York Stock Exchange Composite Index, we didn't see any dent in the advanced decline. Volume was on the downside, was a little bit stronger. Prices really didn't go anywhere. It was marginally, as you can see on a weekly basis, the market was just slightly lower. Not a big thing. And the same thing with the Dow, the diamonds, that is. And so looking at the diamonds, it almost is as if they've maybe bought too much of the blue chips and are underweight in the technology space. So looking at the weekly charts, I mean, quite frankly, it doesn't tell me, hey guys, we got to buy some deep out of the money puts. This thing's ready to rock and roll to the downside. I just don't, again, have that setup at all on any of our stock indices here. So with that said, let me go back over here to our multi-time and say, well, what trades can we look at? Well, we're still two-sided trading, and that's what this means to me. And all that analysis that I just put out is right here in your weekly sheets that you can, hopefully everyone has downloaded. I think one of the things that we need to really watch is this weekly bullish technical condition. It exists. It's both in the NICE and the Dow, but you know, we could see a continuation of two-sided trading market conditions. Seasonally, we're in a weak period for most sectors. So ES, two-sided trading. You got to look for a daily close over 88.5, and so on your sheets here, or on the charts for that matter, as I've pointed out, look what we've, even on this downdraft, market couldn't close, incidentally, really below that day's last conditional change and both moving averages. We've yet to close even this particular downdraft, and there was follow through and it snapped right back. The market's yet to close under that 1860 level. So on a daily chart, one of two things are going to happen. Eventually, we're going to have to, move out of this. We've been in almost a 3-month trading range. I mean, we go back since here. Like I did on the video last night, real simple. If we took out these 2 days, I'm not sure I did this for everyone on the other day, but if I took those 2 days out, and then if I took out those 2 days, and once again I took out those 2 days, literally the market is still, I mean, in a channel. It's just made a little kind of a box move, a box move meaning this is one box here, and now this is a new box here. So without, just underneath all these long shadows, it's almost as if the market's, comes back. This is an old shelf of resistance, becomes a new shelf of support. So as you can see, if I overlap these boxes, we're still maintaining above this sideways price zone. So I'm looking at this market and I'm like going, wow, the market seems to be really respecting these old highs in here. It seems to not be able to close, and eventually, don't look at absolute highs and don't look at absolute lows. Look at the average, and that's one of the things that I constantly try to teach, and has worked for me for an old school. Jack Fintel taught me that, and he taught me that back in after George Lane. Jack Fintel was a floor trader at the Board of Trade. Really an incredible technician, as well as he was instrumental in showing me about higher degree time frame moving averages, like using weekly and monthlies for daily support levels. So in any event, I guess this would come from a theory of Darvis, which Darvis had this little box, construction. Right now, until we break down below this little sideways channel box, the market's still acting, undecisively bullish. So what the key is we need to see the market on a daily close above that level, or a daily close below the 1860 level, which I've just accidentally removed. So let me put it back up there. There we go. All right. So, that leaves two-sided trading. And when we look at today's action, or even this week's action, we have a lower predicted low and a higher predicted high for this coming week. So even the weekly pivots are kind of suggesting we've got two-sided trading. And if we do get a close over 88, I'm not saying that 1916 we're going to get there, but I've been saying that if we do get a rally, it'd probably be NASDAQ-led, and we have a shot at a 3% move. Is it going to be this week? I don't know. This week is the last 5 full-day work week that we have. Next Monday is Memorial Day. Today's a holiday. What do we have today? Canadian Victoria Day, I believe. In Canada, Victoria Day, something like that. So in any event, looking for the market, any breakout above the weekly pivot, which is today's high, the daily moving averages, which is near today's high, you can see that we do have overhead resistance up here. And I'm going to change this over to a 60-minute chart. You can see that a little more clearer. Okay, so here's the weekly pivot. So they got a shot, and we just saw what we had as far as the daily moving averages, around 79.80. So that's going to be, if we can get back above that swing high, it's the weekly pivot. And my suggestion is I would like to see higher highs, higher lows, a breakout there. We still have to be on guard for the market to rip to the upside, okay? On the opposite side, we got to look to see if we rip in a daily close below 1860. So I thought it was fairly impressive. Friday, nothing happened, and then all of a sudden we got that 60-minute burst, and in the last hour we had that little recovery that went through the weekly opening range, just made us literally unchanged for the week. So for the S&Ps, two-sided trading, I'll be looking for, we've already tested this level the first time. I think for any downdraft or day trades, if you take out this morning's swing low, down near the 65 handle, then we're talking, a minimum objective is to test Friday's lows near that 61, and we'll see what happens. If we get a close over that swing high and you break out, we want to catch the momentum up to the upside on that breakout above that swing high, which is above the weekly pivot. Moving on, British pound. We had some good analysis, outstanding analysis last week with the pound. This week, I'm looking to see if we get any kind of a short covering bounce near 68.82. Stop should go above 948, which is this last conditional change candle. We're a little over on the oversold. The market really didn't go anywhere, per se. We went from like almost 170. Let's round down. It's 169.90. We'll just say 170. To about 167 and change. So about a 275-point move to the downside. Easily we could see a recovery up to this level. And look for intraday sell signals over the next day or so as we pop near 168.82. Small spec still long, hedge funds reduced their holdings a little bit, and the commercials got a little bit longer covering some of their short hedged positions on that little downdraft. So perhaps we've got an A, B, C, and then a D wave. So watch those levels, and they are, again, for those who do not have Genesis, the lifetime, everything is on these sheets. I've just done it for the lifetime Genesis users. As far as the euro currency is concerned, this was an interesting concept here as well. It's kind of the opposite of the pound. We get an opportunity to see the markets in the euro tend to have a recovery going towards the end of May from a seasonal perspective, and here's that seasonal trend right there. And the downdraft here that we saw in the euro currency, not a big move. We got 2 days of dojis in a row. So if you get a close, either a high close doji or a close above this last conditional change candle, I would be looking for a surprise rally to 138.5 to like maybe 139. If I show you guys the commitment of traders, let me see if it's still on here. It's not, so let me add it. And I'm just going to make this a histogram to make it kind of easier to see. All right. So as you can see, we had hedge funds long, commercial short. The small specs have been short the whole time, right? This is a zero line histogram, green. Anything below the zero line reflects a net short position from the small specs. So they've been clinging on for quite some time of looking for the euro currency to decline. I mean, they've been actually really short the market since this low here at 133.5. And as you see, the hedge funds, they kind of trade both sides of the market. They get short, they get long, they stay long, then they reduce their longs, and then they get neutral, flat. And if they decide to come back into this game and get long the market for one more pop to the upside, that's that surprise rally that I would watch for, because the market is setting itself up not only on a seasonal basis for a pop to the upside, but even the volume histogram reflects that there's not a lot of selling going on down here at these lows, right? So we made higher lows in the on-balance volume reading, and you made lower closing lows at that same time. So with that said, to me, this might have a little surprise rally. The fact that we got a couple dojis in here, you get either a high close doji or a daily close above that last conditional change candle. It is the high above 513, May 13th, close above that, and I think you got an upside surprise MAC attack coming in the euro. All right, next, crude oil. Crude oil on our sheet, we did form, and this is a weekly chart. We have a weekly high close doji, but the market is in an uptrend, not a downtrend. This would be a lot more meaningful if it was in a downtrend, but nonetheless, it does command a little bit of respect to the fact that, you know, if you want to consider 3 weeks down, then a doji, and maybe we could go back up and test the upper end. The market is, from a seasonal perspective, as we get into Labor Day, we have a quick little pop to the upside because, you know, everyone's going to pay top dollar for gasoline. And then after that, you see another downside action in the energy complex until about a week before the 4th of July. So with that said, we could see, you know, a move, if not up to test 374, that swing high. And if you close above that level and keep going, if we take a look at our monthly pivots, we've got a potential run that could test to 106, which makes, you know, it's reasonable because we were there. Now keep in mind that we do roll over. ICE, WTI, it rolls over today. Tomorrow we roll over out of June into July crude oil, so that might reflect that little that roll that's going on. So there's crude oil. Coffee prices. I'm looking at coffee real quick because coffee we identified seasonally. This thing breaks down. We had a low close doji. We tried to look for a snapback to sell. It never happened. So I'm looking to try it again. If we get maybe a 196.30 pop to the upside on a weekly basis, stick within the lower high concept and these moving averages. Stop should be above both moving averages and last week's high. That is still about, and I'll just share this with you. This is it doesn't look like a lot of risk, but it's just a little north of about just about $2,400 risk. So maybe options are fairly thin in this market, but if you do get a little rally, I think that we're looking for, at the very least, a challenge of this low as we form a longer-term top going into the summer. This is the worst time of the year to actually be long the coffee market. This is a seasonal annual high in coffee prices. So with that said, soybeans, we're just mixing it up a little bit here, looking for other trading opportunities. If the market pops back down near this 1455, I just averaged up, it's really around 1450, 55, somewhere in that zone on an intraday basis. So you intraday traders, if you're looking at soybeans, we have a daily support near here. We have a weekly support. There's a lot of confluence down in here, and we typically see the market support and have rallies going into on or about the third week of June. So I'm not saying put an order to buy at 55. I'm saying watch the market at 55. Look for an intraday buy signal. At the very least, keep your stops under 44 initially if you're intending on keeping this as a swing trade. If not, and you just want to do day trades, then as the market moves into, it has a habit of once it pops near support and it moves up. If you check out your daily pivots, you'll find that they kind of respect the daily pivots. You can see it right in here. I'm going to just share with you this. So when we do get trends in soybeans, right, you can look to be a buyer on pullbacks near daily support, right? So as you're a buyer, you can see, look at all these markets that actually do hold until things change, right? So, I mean, you have a lot of time, a lot of days that the daily support in a bullish uptrend actually works. So if the market's bullish, look for pullbacks near your daily pivots, and then just use your PPS like a 15-minute buy signal or a 5-minute buy signal against that. It'll for you self-directed traders, if you're looking at other things to trade, that might be helpful into this week. Next, last but not least, Friday we talked about I didn't want to hold any short positions over the weekend, but if there's a chance, I'm still looking at the feeder cattle. I don't know if we have it the way we closed on Friday. We could see a little surge, one more pop to the upside just to explore any buy stops that are left up in here. But I'd be looking for sell signals up against this 195.27. That's the monthly pivot support. So we've upped that number there based on Friday's closing price action. Next, that leaves us a small little stock, and many of you may know about it. It's called Red Hat. This is a weekly chart. We did form a weekly high close doji. It has a little seasonal uptrend to it. On balance, volume was pretty good, and the market came right within, as you can see, typically you get these benchmark breakouts. It's the midpoint to the open that holds support. You don't want to see the market close below that low. And as you can tell, the market has maintained just that. So from a high close doji perspective, I think if this market's truly bullish, you get a chance for a pullback here, and do not risk any more underneath. You don't have to go the low of the doji. You could, but I think if this market's truly bullish, it shouldn't get below the 2 week ago low, because we've already kind of established 3 weekly higher lows in a row. All right. So Red Hat was a stock I thought for the room we could take a look at. And then last week we had, if you look at your sheets from the 11th, you'll note that we had INAP. It's in the Internet Software and Service sector. We had a 675, I think, or 679.80 buy zone in here, and it missed us by a bit. What I did is raise the price, raise the stop. If this thing is going to catch an upside swing, we have a shot at maybe coming back, hitting 703, and keep your stop. Remember, look at the percentage of this trade. It's 5%. So this is, even though it's a $7 stock, don't load the boat on this thing, right? So there's the opening bell. We're already fluctuating here. And with that said, last but not least, I did want to take a look still at the consumer discretionary sector, because it still has this diamond pattern. And all it's doing is we need to see a breakout above 64.72, and then look for 66.25. A close below 61.85, and it's going down. As you can see clearly, we are in a sideways range. When I change this, if you look at the IYT, you'll note that, I don't know how many people had caught that, but rail stocks are not cheap by any stretch of the imagination. So let me just take a quick gander here. Okay, so this is the transportation sector, and it looks, I mean, quite frankly, dramatically different than, say, the banking sector. In fact, the banking sector, this is the S&P KBE, all right? So when we take a look at the banking sector, you'll note that it's the lowest weekly close. Almost looks like the Russell, in fact. But the banking sector, the KBE had an amazing run last year, so maybe there's a little bit more downside in the KBE, and it recovers. Somewhere maybe we get something like down here, another 80 cents, 90 cents in that index. And that would, if we take a little closer look on these monthly bars, so you have the trend, and you probably go through at least a little period of consolidation. Remember, these are monthly bars. So it had a huge uptrend, and that might explain it's just had this amazing technical run in the banking sector. And so if we do get maybe a pullback this week, what could help support this market? Well, one of two things. We get a turnaround in the KBE, banks, financials, a turnaround in the NASDAQ, especially some of those biotech names, and, you know, it's game back on. It's going to frustrate everyone who's bearish this market. And, you know, I can just say that even for myself, from a seasonal perspective, we do see strength coming into the NASDAQ going into July, and it was kind of interesting to note that last week, the one sector we started to see that, you know, profit taking in the Dow, and then some money going into the NASDAQ. And so it's a sign, it's a tell, but we got to look for more of that continuation. So with that said, that concludes our planning and scanning. We have a list of stocks to look at. This week is, for the rest of the week, looking at our events, reports, Bank of Japan announcement at 12:30 tomorrow night, or tonight actually, or right after midnight, so to speak. We have the rollover. We have very few earnings. Urban Outfitter is out this afternoon after the bell. We have a bunch of retailers here that are coming out as well. Target, people will be looking at, is Wednesday. Williams and Sonoma is WSM. Sears Holding right there. We've got Perry Ellis. They do clothes. Kirkland, they're the product that's sold in all of Costco. And Dollar Tree, we've got Gap, we've got even BBY, Best Buy coming out. So we have some retailers out. Home Depot will be a bigger name for tomorrow. And those are our what we'll probably be looking at is maybe some opportunities, if there is any decent setups in those, that might give us a clue for some type of a move for earnings plays. So other than that, we're concluded our weekly planning and scanning. I hope everyone found that at least the insights of, I wish I could say, guys, the top is in, get short, but I can't say that yet, okay? If anything, I can say we still have the same old market conditions, and it's like a broken record. But nonetheless, be cautiously, I'm still cautiously optimistic on the market here, but it is a two-sided trading game. End of story. All right, two-sided trading game. All right. With that said, that concludes our morning briefing session. Everyone have a great trading week. Thank you.